Well, you're talking about the first earnings from the cement universe, the cement space, and ACC Limited will declare its earnings. Now, what is it that you need to keep an eye out for? Remember, this particular quarter is going to be a historic washout quarter for most of the companies, including those in the cement space. But there are quite a few green shoots, quite a few positive triggers that you can take out from this particular earnings season, especially when it comes to the cement sector. And ACC being the first company, a lot of eyes will be on it as to how exactly the industry has coped up with the effects of the pandemic as well as the ensuing lockdown. So when you're talking about ACC, number one, what is it that you're looking at? Number one, you're looking at the volume offtake. Remember, April and May, you can expect almost no volume offtake. And June, there appears to have been some amount of a recovery in the construction activity. In fact, a few ET Now dealer checks indicate that volume activity was actually slightly better than what was anticipated earlier, with rural demand being quite resilient. Prices, when you're talking about prices, certain parts of the country actually saw price hikes in the month of June. So East as well as South India saw significant price hikes, and April and May were quite flat on a sequential basis. Expect recovery sequentially as far as pricing is concerned, but volumes are something that could be a bit of a dampener, and most of the industry players would need to actually recover from that particular setback. When you're talking about revenues, are seen down almost 35% on a standalone basis, and mainly on the back of the fact that volume figures are expected to be very muted, with offtake almost nil for certain part of the lockdown. EBITDA is seen down 39%, mainly on the back of muted volumes. However, EBITDA could be boosted by two things. Number one, net realization sequentially could be good. You're also talking about, when you're talking about input prices, petcoke prices as well as coal prices were somewhat of, were actually quite lower on a sequential as well as on a year-on-year basis. So you could see margin improvements coming in as far as ACC is concerned. When you're talking about the profitability is seen down almost 43% on a year-on-year basis. What are the key highlights in the quarter gone by? City expects 27% year-on-year volume decline, and do not be surprised if you see a number close to 30%. So 25 to 30% volume decline is something that the markets would actually anticipate and would not be too surprised by. You're talking about realizations. I mentioned about how realizations could be higher sequentially, and other thing, on a year-on-year basis, expected to be slightly down. Remember, last year towards this point you actually saw quite a bit of a strong pricing. Key things to watch out for: volume as well as pricing trends, the company's updates as far as the MSA, the Master Sharing Agreement with Ambuja Cement is concerned, and what kind of cost savings it has led to. Also, what is it that the company is saying in terms of how there has been a recovery as far as construction in India is concerned. And lastly, what is it that the company is saying for the rest of the year? How are they penciling in volume as well as margin offtakes? Does the company expect to continue to see petcoke price reduction, and whereby it could aid margins? So, lot to watch out for. It could be the harbinger as far as cement companies are concerned.